Welcome back, everybody, to another episode of Loan Officer Life, Hustle, Heart, and Home Ownership. I'm joined today by Jake Vermillion. Jake is with Mortgage Champions, and Jake is, I think you've turned into one of my better friends in the industry, man. I'm so happy that our paths have crossed and continue to cross. Thanks for joining me.
No, it's an honor to be here. Thank you, Brian, for having me. Obviously, you're a legend in the industry and a goat on LinkedIn for sure. I always feel like I pick up nuggets when I get to hang out with you whenever I listen to anything that you've wrapped up in. I feel like I need to ask you, like, how you even just manage all of it these days, because you're doing this show, you're still part of the Rethink Everything community, and I'm sure quarterbacking secret projects over there with Kyle, and then you're part of the Crispin commentary now on Fridays, and I hang out with like KP and some other people on that show. So you got a lot going on, bro.
Yeah, it gets when you start laying it out that way, you start to get my heart rate up a little bit. So thanks for that. No, you know what's cool about all of this stuff is, this podcast that we're going to do here, that we're recording, and this is what we do. We just have a conversation, and
love it.
So I don't have to put a lot of thought into what we're going to talk about, because it's all about my guest. In this case, it's going to be all about you. The Rethink community is just that. It's grown. It started with 37, selfless people who, shared their expertise, and it's grown exponentially from there. And those are just all authentic, organic conversations. And then, of course, as you said, the Crispin commentary, Last Word on Friday. If you've watched one episode, you pretty much know there's no preparation. We are a show and go show.
I understand, yeah. Like 50-50 shot, KP's like in the car headed somewhere, right?
Yeah, exactly. So
that's awesome.
But yeah, Jake, what I love what you guys are doing at Mortgage Champions. I've been a big fan of Dale's for forever. And
appreciate that.
I want to start by just, here we are, it's May of 2025. We've got this pesky, persistent, level on interest rates. Yet I've been in rooms with you guys, hearing you talk about strategies that honestly have nothing to do with interest rates.
Oh,
and I know for a fact, I know more than a handful of the folks you work with who are excelling in their business, despite the market, despite the rates. And so I'm excited to have you on with this audience, and, without giving away the secret sauce, but, it'd be great to get your insights on what you continue to hear in the market, from originators, and what some of the most successful people in today's market are doing to win.
Yeah, absolutely. Well, let me zoom back a little bit before we even get to the originator. I know that's who your audience is and who we're going to talk to today, but the reality is we had a lot of conversations at the executive level. Right. And what we're hearing, honestly, more than I've ever heard in my time with the company. I've been with the company for 8 years now. Not totally a newbie at this point. Also not a 30-year vet, but hey, working in that direction.
That's right.
What I'm hearing more from the executive suite that I haven't heard over the last 5 to 10 years is that lenders feel pretty good about where they're at in terms of technology. Of course, there's like the AI revolution that's sort of hanging out there. People are trying to wrap their heads around it, but even that, there's sort of like cautious optimism, which I think is probably wise at this moment. It's like be experimenting, be restructuring the way that maybe you capture and aggregate data and make it available to other parts of the organization to be able to put AI in a place to be able to leverage it most effectively. But the point is, lenders feel good about their tech stack. And so it's like, okay, we know the market's tough, but we also know there's lots of opportunities, to your point. I mean, we're seeing clients who are seeing ridiculous results. I mean, a recent client of ours, within 60 days of onboarding, 38% increase in locks, irregardless of the market, right? It's just the approach. That's all that changed. And so what we're hearing from the executive suite is, frankly, they need to figure out how to unlock the potential of their people, right? That's their challenge that they're seeing now. They're not trying to go out and sort of reorganize all their vendorships and bring in new technologies. They feel like they're pretty good about where they're at on that front. What they want to know is, how can we help them help their loan officers realize their full potential? Right. So it's a focus away from sort of process and product back to people. And so for you as an originator, what we're kind of seeing is frankly, two camps. We see a lot of loan officers who are really struggling. They're just kind of trying to survive, honestly, through this market. And then we see a select few who are just absolutely crushing it.
Right.
And so our mission at this very moment is to help those loan officers who, for the most part, are struggling in this market to understand that it's not the market. You can't allow the market to dictate your success. What you have to rely on for your success is your beliefs and your behaviors, right? So mindset and methodologies is how we like to think about it. So what are you believing about the market? What are you believing about the potential opportunities in front of you? What are you believing about the value that's wrapped up in either your customer database or your referral partnership network? And then what are you actually doing to untap or tap that value, right, and unlock it,
right,
for you and for your partners as well. So, so that's kind of what we're seeing out there, if that makes sense. We're seeing like some people are just like killing it, and they're like trying to bring their colleagues along with them, and then we see others who are sort of a little bit down in the dumps. I mean, if I could just be honest, or hesitant, just kind of trying to wait things out. This is not a market where you can wait things out. You got to be moving, got to be acting. And so I'm confident we'll get into some strategies that we're going to talk about today of how you can sort of do that and begin to actually build that pipeline and see that, to your point, rates are high, but really historically they're not, right?
That's right.
So it's really not the problem in this market. There are challenges. We need to know what those challenges are, but if you understand the challenges, that's what actually allows you to zone in on the opportunities that exist in this marketplace.
I love something specifically that you spoke of when you talk about the executives that you've been talking with, that they're intentionally investing in their people. And so
the good ones are. The good ones are. Yeah, absolutely.
I'll give you that. But the good news is at least some are doing that, right?
100%.
And arguably those that are doing that are the ones that are seeing the growth as you shared.
Absolutely.
I think that's a great first bit of optimism, audience. When you have lenders and executives and leaders who are intentionally investing in the people, the front line, you all, loan officers, and I hate the word loan officer. I got to put like a rubber band on my wrist and snap it. I love advisor as opposed to loan officer.
That's what you have to be today.
Exactly. But to me, the fact that leaders are investing in the people tells me one thing in particular, that the business is won by people. You can have all the greatest technology in the world, but if you have the wrong people, the consumer is never going to see and feel and touch the technology. And so, advisors, mortgage and homeownership advisors, mortgage advisors that are listening, this is your time. This is the type of market that you need to show up, because you are the key to this thing. We've seen the biggest brands show us the playbook for a market like this, and the playbook is not a tech only playbook. It's a tech plus, so it's high tech and high touch.
That's right.
That's winning the game.
That's right. Yeah, it's a tech enabled approach, right?
Yeah.
I mean, we're seeing this even with the use of AI, right? Or machine learning, even at a simpler level, where some of the largest players and the largest investors in technology, the way that they're leveraging that technology is not to replace the loan officer,
right,
the loan advisor, to your point, right? It's actually to allow them to spend more of their time having compelling conversation with customers, right? And less time just sort of completing the manufacturing process, right? So it's less time inputting data, it's less time looking up records, it's less time researching prospects, it's less time, modeling out how you can structure a loan.
Right.
It's more time engaging with that borrower or with that referral partner to create more relationship, build more trust, and ultimately put that person into position to feel like they can own this decision, feel good about it, right? And then have that sort of wow moment of, hey, it's because of this person that I worked with, this brand that I worked with, that I was able to buy the home of my dreams, downsize correctly, refinance and actually eliminate some debt, free up some cash flow, whatever it was that the goal was, right? They're not going to your point, you said people don't really pay attention to technology. I think that's true. And I mean, just one daily example, if you travel at all, like I do, like you use Uber every time you land, right?
Yeah.
Every Uber ride that you have, what do you remember about the ride? Was it pulling up the app and scheduling your drive, or was it, the car that you ultimately got in and the conversation with the person that you had and whether or not you feel safe in the car, right? Like it's the driver and the experience that they created for you. It's not just the connection that the technology made between you and some driver in Cincinnati, right?
I love that example, because I've been been in hundreds of Uber rides, maybe thousands. I'm not sure. I've been in a lot. It's I can't tell you the last time I got in a taxi cab proper, right? So I'm an Uber guy. But there's still to this day, there's two very memorable rides that I had. And it had nothing to do with the app on the phone, to your point. It was all about the person in the driver's seat.
That's right.
One was awesome, like extremely positive. If I could order that person back up every time, I would.
Right.
The other was the exact opposite.
Yep. Yep.
And yet, hundreds of rides, and I can remember those two individuals, almost like vividly.
That's right. That's right. And good technology in our space, I think, does the same thing. It just seamlessly connects a customer who's looking to explore. Can I become a homeowner? Can I buy that investment property? Can I refinance and actually save some money with a competent professional who can provide that? And then the question becomes, once that connection is made, do they actually get what they came for? Right.
Yep.
You as the originator, that's entirely in your control. Right. You can control that experience. I think that's where the playing field is, the battleground, if you will. And I think you're seeing that from the heaviest investors of technology all the way down to the most traditional bank who, they're still waiting for customers to walk into the branch and connect them with the loan officer there on site.
Yeah, it's pretty interesting when you think about, I looked at, there's a couple studies that I have sitting on my desk, literally, or on my desktop rather, that I refer to almost daily. One is the JD Power 2024 Origination Satisfaction Survey. There was a component, one of the outputs of that survey was that when a consumer engaged the lender prior to the point of sale, right, before the loan application, so let's just say at least 30, maybe 60 days before they actually took an application.
Yep.
Which meant they were engaging with a lender and probably by extension, the loan officer, the homeownership advisor, to help them get ready for ultimately the application.
Yep.
When that occurred, that same borrower was 20% less likely to make any contact whatsoever with another lender.
Yep.
And 54% less likely to apply with another lender.
Sure.
And you said the word trust. They built this trust over whether it was 6 weeks or 6 months to a level that that consumer didn't feel compelled to shop and apply with another lender.
Yeah, well, and honestly, like that's what the best loan officers do is they build that trust because they prove expertise, right? And they take the time to learn about the customer and really get at what are your ultimate drivers here, right? What are your goals? What are your motivators? How can I serve you? Beyond just sort of a transaction. But honestly, Brian, even beyond that, for just the average loan officer who's still trying to figure out, their pitch and become that trustworthy expertise, maybe they're new to the industry, time is incredibly powerful. As humans, we naturally want to reciprocate when someone spends time with us. So even if you're still figuring out, you got the training wheels on, right? You're still figuring out how to build trust effectively with a prospective referral partner or a customer. If you just spend time with people, they're going to feel like they don't want to have to spend that same amount of time with someone else, if nothing else, right? It's like they just want to like, well, I've already spent so much time with this person. Like, do I really want to do that again with another person? But even on the positive side, they're going to feel like, well, Brian spent all this time with me. He's, he's figuring this out for me. Yeah. He's guiding me on this journey. I feel like I owe it to him, to like cross the finish line with him. So you can build partnership with people just by spending time, even if you're still in the process of figuring out how to best spend that time to really actually truly build relationship trust and confidence from that customer or that partner that you're the right person for the job.
Something that I've heard Dale, if I've heard him say it once, I've heard him say it 100 times. Stop sending the link. Stop
100%.
Sending the link. Let's talk a little bit about that, because I think this is part, I originated my first loan in 1991. So there were no links back then. The only link that existed is if you had a chain, with links on it.
That's right.
And so we used that interview process.
Yep.
And we didn't send an application, say, fill this out and send it back. We literally did an interview and we and wrote it out.
Oh, yeah.
And yet today we're in a rush to send our link.
Yep.
And so let's break that down a little bit and talk about the power of avoiding or at least delaying the link part.
Yeah. Yeah, so a digital application is a necessary component of the process today, right?
Yeah.
You're not going to be seen as competitive if you're
Right.
still taking applications by hand, even though in theory that should be your mindset, right? So call it what you want: co-piloting, co-guiding. You find a phrase and cling to it, but the idea is that you should be walking step by step with your borrowers through the application process. You should not be forcing them to self-serve. I think we sort of have begun to believe a myth in our industry that the industry is ultimately going to be sort of made like Amazon, right?
Right.
And Amazonification, I think, is the term that I've seen thrown around, and I think
Right.
there is some truth to that, right? There's a level on which digital experiences are always going to be sort of barred against or gauged against the best digital experience that anyone has ever had, right?
Right.
So the Ubers, the Airbnbs, the Amazons, the Apples, you name it. But the reality is, people understand that buying a home is a much bigger decision than like buying a TV stand off of Amazon, right?
Right.
And so there's still apples and oranges to a degree. And so, while we need to have a digital application process, if for nothing else, then it makes the process faster for the menial bits that don't add any value or trust. Things like uploading your documentation, connecting to a bank account to verify income, those sorts of basic things.
Yeah.
We don't want to believe the myth that people actually want an Amazon checkout experience in signing up for a 30-year debt.
Yeah.
Does that make sense?
Yeah.
So I think we need to show respect for the gravity of that decision that people are making, right? There's a lot that they're weighing. There's a lot of emotions that are coming out in that process. Unless this is a very home buyer who maybe they're on their 7th, 8th, 9th transaction. Honestly, the mistake that most loan officers make is they assume that it's younger people who
Right.
want to totally self-serve their mortgage. It's the exact opposite. It's like the baby boomer who's on their third investment home, you know what I mean? Who's like, yeah, just send me the link. I got it. You know what I mean? I've done this process. I get it. You got my business. Don't worry about it. Just send me the link. Like, you probably can't with that person. But these younger buyers, these first-time home buyers, people who are looking to refinance, and it's a fairly complicated transaction of like, what are we doing with, eliminating high interest debt, potentially padding savings, trying to reduce, monthly payment, et cetera. Those are the people who really want to spend time with you. So sure, send off a link within the first 5 to 10 minutes of the conversation after you've established who you are, who your company is, why you're different. You've confirmed what it is that they're trying to accomplish. You've explained the generals of the process, right? What it's going to look like. And then you say, okay, so now, we're going to stay on the phone for the next 20 minutes. That's all it's going to take, right? But I'm going to send you a link right now. You can open it up on your side, on your phone, your laptop, whatever's easiest for you. And we're just going to walk through this together. And we're going to answer some basic questions. And, and then the other thing I would say is the loan application is not written for humans. It's written for CPAs,
Right.
right? So, it's going to say things like dependents. Like we can sort of filter some of that language and make the mortgage application process a human process once again. So instead of, well, how many dependents are you claiming? How many kids do you have? Oh, what are their names? Oh, that's great. Oh, and how old are they? Oh, do they play sports? Like, you can be making conversation, getting to know your borrower, understanding what motivates them in pursuing a home anyways, you know what I mean? And be filling out all the little pieces of information they need to along the way. So that's the key thing. It's not that we're anti-digital application. It's not that you shouldn't be sending links.
Right.
It's that you should do it strategically. And the point is so that you can be walking through that application together to really understand, the customer. And then maybe most importantly, be there for the most common points of drop off that we see with digital applications that are self-serve, right? When they go to upload documentation, when they go to pull credit, right? These are common points where people have that second, they're like,
yeah,
wait a minute. Is this actually what I want to do? Am I ready for this? You know what I mean? Is there going to be an impact on my credit score? I mean, there are all these questions that are going to come up for people. If you're right there ready to answer them, that's going to position you as the expert, right? And instead of them going to Google or ChatGPT or your competitor's website to learn, because if someone Googles, is my credit being pulled in a mortgage application going to impact my credit score? They're probably going to end up on like LendingTree or Zillow, or you know what I mean? Like, that customer is being sent to your competitors if you've self-served that digital application link. So you want to keep them in your ecosystem. This is like the big conversation in the industry is ecosystem, right? So you as a loan officer, to a degree, can maintain your own ecosystem, and like co-piloting the application is one of the easiest ways to do that.
I love that. And it's such a descriptive way to say that, right? And the other thing, I've seen you guys present on this a number of times. So I'm a loan officer. Jake, you're a first time home buyer.
Mhm.
We've built rapport. We built the trust. I've co-piloted through the application process. Um, I'm if I'm really doing my job as a home ownership advisor, not just a loan officer. To me, a loan officer is a one and done transactional, kind of person. The home ownership advisor steps in, and now, Jake, I'm going to be with you for the next 30 plus years of your
That's
home
right.
ownership.
That's right.
So twice a year we're gonna assess, your equity. We're gonna take a look at your holistic finances around your home.
Yep.
And based on our initial consultation, you had shared you have a desire to start buying, start owning investment properties. So in the next 2 years, we're going to in it, put in place a strategy to leverage equity that you built in this property. So
Love it.
that co-piloting part of the journey is setting the stage, in my opinion, for the right to have a 30-year relationship with that homeowner.
Agreed. Agreed. You're walking alongside them for all of their home ownership needs. That's what you're doing. Yeah, I love the emphasis on from loan officer to loan advisor, loan expert, whatever word you
Yeah,
want to use. Because I think even just the simple, like when someone hears something like loan officer, or even when you tell yourself, right, I'm a loan officer,
yeah,
what you're focusing on is the licensed activity, right?
right,
Which is you're a gatekeeper. Someone has to work with you to get what they want. That's not how we want to position ourselves, and it's certainly not how we want to be positioned within the minds of our customers. We want to be the person that you want to work with to accomplish this big goal that you have, right?
right.
Not a gate or a door, right? And we're welcoming you through like that. I think I just love the mindset shift that you're setting up there and crystallizing.
Yeah. So let's in the last few minutes here, let's talk about some of the more interesting strategies that you all are not only coaching on, but
Yeah,
kind of seeing people win with. What comes to mind for you in terms of what your best advisors are doing to win?
yeah, absolutely. It really comes down to what the brunt of this conversation has been, which is that expertise is what's going to sell in this marketplace, right? So there's two pieces to that. The first is that we like to say that rates and applications have an inverse relationship, right? When rates go up, the number of applications that you're going to see submitted goes down, vice versa. Okay.
Yeah.
So knowing where rates are at today, we can naturally assume that there's going to be a lower amount of mortgage application volume. Okay. Well, we can either just say that that's what it is and do nothing about it, right?
Yeah.
Or we can actually try to change that narrative, which we have the power to do so as originators. So first and foremost, what you have to do is you have to take your expertise and you have to get top of funnel, and you have to introduce to people the idea that they may be in a position to either become a homeowner if they're not one already, or leverage the equity within their home to achieve other financial goals. Okay. So there's some inception that we need to
Yeah.
participate in here, right? Because people are going to write themselves out of the market based on narratives that aren't necessarily true, right? It could be narratives from their parents or ChatGPT or the traditional media. I see people on LinkedIn all the time calling out articles in like the New York Times, for example, massive exposure,
Right.
and just talking about how unbased, their advice is. So we need to be able to point out the opportunity for people and like paint the pathway for them as a person. People want personalized advice in today's market. They don't want generalities, right?
Right.
So while there has to be a certain level of generality that you have to start with if you're going to go out on, social media or in an email newsletter, whatever it is, right? Talking about refinance or purchase opportunities, you have to, as quickly as possible, get down to a one-to-one conversation where you can start to begin to help someone understand how Brian, can leverage the equity in their home or become, a homeowner for the first time in their life or the first time in their family or whatever that story is, right? So that's the first area. The second area is because of the structure of the market. Today, we have more personal consumer debt and also more home equity than we've ever seen in history, okay? Now that matters for not just refinances, which obviously is a huge opportunity there to restructure high interest debt with low interest debt, comparatively, right?
Yeah.
If you look at blended rates, but it's also a factor on the purchase side. One of the common mistakes that we see, especially with uneducated buyers, is that they think that they need to make a 20% down payment. Now,
Right.
even if you've dispelled that myth, which loan officers are getting better at, the natural thought process still is, okay, but homes are expensive, rates are high. I want to keep my monthly payment as low as possible. So what should I do? Put as much down as possible,
Right.
right? And what they end up doing is they drain all their personal savings and they continue to service high interest debt. And in a lot of situations, after closing, they go on to put more on their credit cards to make home improvements or pay off the cost of moving or whatever it is as they're adjusting to their new life and their new home. If instead we as loan officers take the time to not just consider debt for a refinance opportunity, right, but to consider on the purchase side of, hey, maybe we put less down and we eliminate some high interest debt with the savings that you've put in place for what you thought would be a down payment, and we pad your savings so you've got some reserves in a volatile market, right? And we can make home improvements if you want to make those without having to put them on a credit card debt and then pay 22% APR on that for the next 5, 10, 15 years. If you actually do the math, even over a 3 to 5 year break period, right? It often is much more advantageous for a purchase buyer today to put less down and deal with the debt that they've accumulated, right? And prevent going into further debt with high interest rates, and roll it into the mortgage, if that makes sense. So really today, the loan officers who are winning, they're doing a couple of things. They're out there generating business for themselves, which if you're direct to consumer, right, that's like, whether that's buying leads or that's, doing social education, writing emails, you name it. If you're referral based, then it's drastically expanding your referral partnership network, because that's the only way you're going to get more opportunities in this marketplace, because realtors on average are doing fewer deals and you're seeing more backsheet listings, right? So if you want more opportunities for loans, you simply have to get a lot more referral partners in place. And then secondly, once you actually get that customer in hand, you need to be having those detailed conversations around debt, regardless of whether it's a purchase or a refinance. Does that make sense?
It does. It's such a I mean, what you just described on laying out the options, that here's a 20% scenario, here's a 10%, maybe a 5% or a 15, whatever.
Yeah.
2 or 3 scenarios.
Yeah, or a 3 FHA, right?
Yeah. I mean, you doing that as a homeownership advisor, you're definitely standing out, because you're in the elite at that point if you're going to that level. And you hit on this earlier, there's higher rates, less applications in the market in general, which means, guys, you have more time to do this. You don't need to just send the link so that you can get to the next one. You don't have a next one necessarily.
That's exactly right.
So I would be leaning in and spending as much time as this prospective client of yours is willing to give you. And frankly, if you're leaning in the way you described, Jake, I'm taking all that in as a buyer, especially if I'm a first time home buyer, right? Because I don't know any better.
Absolutely. Yeah. And the other way, so you have to lean in terms of like, stop rushing, stop sending digital links, stop having such short phone calls, right? You should not be having 2 to 3 to 5 minute conversations with a borrower the first time. Of course, sometimes life necessitates, right? You get a quick call, you're at your kid's soccer practice, but you need to be setting an appointment in that situation. You'd be having a 25, 30, 35 minute conversation and beginning to take steps through that application and collecting documentation, right? That's going to get that customer bought in. But I would also highlight, if you're a local loan officer, which I bet a bunch of your audience is, you've got to get face-to-face again. And some of you are doing this and you're doing it well and you're seeing the results. The rest of you, frankly, are probably, you've gotten a little too comfortable with the post-COVID world, and we all have. Like you're not the only one. We had to have this conversation internally at Mortgage Champions, right? Like we all started working remote in 2020, and we had to talk about what have we lost by not all being in the office on a somewhat regular basis. You know what I mean? And so we have more of a hybrid schedule than we did before, where it's not out 5 days a week, but we are here. You know what I mean? And we're intentionally also getting on planes to spend more face time with our clients, right? It's just, we need to get back to that pre-COVID world. And so you as a local loan officer, you got to be out in your community. You've got to be face-to-face with referral partners. You should be taking face-to-face applications. You shouldn't be doing these guide applications over the phone all of the time. Some of the time, sure. But you have to, with every customer, offer the option that they would like to get together in your office, at a local coffee shop, in their home, to walk through the application, have you answer any of their questions. You need to be doing that with every single borrower. And the same is true for your networking, right? You just got to get out there, and that's your local advantage. You want to beat the Rockets of the world. It's like, they're trying to replicate that. So lean in, because you have the advantage right now.
I was going to go there. I'm glad you said that, because it's easy to say, well, I'm doing okay not showing up face to face. But yet that same originator, I'll see them post something, disparaging one of the online lenders. And I'm thinking to myself, well, what makes you any different if you're not showing up?
Yep. Yeah. We have a client who they had a new loan officer. This was last year, right? Or end of 2023. Brunt of the work was 2024. Polish immigrant. I mean, honestly, doesn't speak very good English.
Yeah.
We told her, hey, consider going to open houses. She decided that she was going to go to 5 to 6 open houses every single Saturday. She went from doing 1 loan a month to doing 20 loans a month on average. Just doing open houses. You know why? Because
she showed up
there.
Yeah, she showed up.
Nobody else was there. Nobody else was there. She got both the realtors involved. Every conversation that she had, she at least seeded the idea of an application. She was doing pre-approvals with every person who came into the house. It just made it, she made it seem like it was part of the process. Like, oh, welcome to the open house. Go see the house and then come meet me at the kitchen counter. You know what I mean? And we're gonna get you pre-approved. So that if this is the right home for you, great. And if not, then this realtor is going to take you to 20 others. And when you're ready, we got the financing in place. It's not rocket science in a lot of situations, Brian, but it's being willing to do what other people aren't willing to do. That's your differentiator. That's what's going to set you apart in this marketplace. That's what's going to let you win.
Yeah, and I think I would just say the fact that you're local, loan officers, homeownership advisors, that's your superpower. It really is. 100%. You have, not every borrower is going to take you up on it, but you have the ability to make that offer and give the consumer the option to actually physically, get face to face and build that relationship. Jake, this has been awesome. Just it's exactly what I was expecting. I love what you guys are doing, and I love seeing the results because I know enough of your partners and clients to know that what you say is actually working, and what you coach on is actually working in practice. And for that, I'm very grateful.
Well, we appreciate that. We live or die by our client success, so we're excited about that. If anyone wants to learn more, just visit mortgagechampions.com or honestly just DM me on LinkedIn. That's where I love to connect with people. Brian, let me say this. I know you haven't asked me to do this, but everything we've talked about, it proves out that the homeownership journey is going to be longer than ever. People are going to need more time than ever to prepare for taking that step into homeownership. And so what you're doing through Key Steps, for example, and FinLocker, it is critically important for a loan officer to establish that expertise, to nurture that relationship, to keep them in their ecosystem so that when they're ready, right, they can help that customer make the best decision, especially stepping into a first-time home buyer situation. So we love what you do as well. We recommend it to all of our clients who don't have some sort of tool to be able to monitor all the things that you monitor, because I just don't know how you win top of funnel without tools like yours. So thank you again for having me on today. I hope the tips are helpful to people, and I hope to have some conversation with some after people and hear how it changes their business.
I appreciate you, Jake. Guys, thanks for tuning in this week. Come back next Friday for our next episode of Loan Officer Life. Keep hustling, showing up with heart, and helping people achieve home ownership. See y'all.
Thanks, Brian.